Hi everyone, this is June from Turning Point Life Investment, and this video is for the week of July 26, 2008. Let's take a look at the market again using SPY, starting with a long-term monthly view going all the way down to an hourly view. Nothing really much has changed from last week. Prices are still trading under the 50-month moving average, as you can see here. Just looking at the price pattern alone, you can see that we have a series of lower lows and lower highs. And by definition, that is a downtrend. Right? So even if you don't look at other indicators, just looking at price by itself, you can tell that there's still a strong downward momentum that's going on right now. Volume is definitely high. Stochastic is pointing downwards, and MACD is also heading downwards. So all of these things kind of tell us that we still have pretty strong downward momentum that's going on right now in the market. Let's zoom in on a weekly view to see to get a better look. Last week we did produce a hammer candlestick right at 120 support. Okay, 120, we haven't seen 120 since 2006 of last summer. Let's zoom in a little bit here. This hammer definitely put a stop towards this large ugly decline that we had. However, this week the momentum was not a really good follow through. You can see with the small dark candle, it basically indicates there's still a lot of indecision that's going on in the market. The bulls and the bears, they don't really know where to push prices right now. It was pretty evident with this week's price pattern. It was just kind of choppy, and it didn't really go anywhere. Okay, so my best guess is we're most likely going to see more choppy trading pattern going on. Probably going to side trend for a bit, allowing this 20-week moving average to catch up to the prices. Okay. Now, from a daily point of view, we did mention from last week that there's a really good chance that prices will tag the 38% Fibonacci retracement, which it did this week, right at 129. A strong correction will usually come up and tag 50 and even 62%. Just based on looking at the retracement right now, it seems like it's a pretty weak correction. Now, usually markets do display some kind of harmony with price and time. From our decline that started in mid-May all the way to mid-July, it took 2 months. Now, this here probably took less than 2 weeks. To say that this correction is over is, I would say it's a little premature. Usually a market takes a little bit longer, right? If the decline took 2 months, it'll probably take either a month or another 2 months for this correction to kind of work itself out. To say that this is the end of the correction, we're going to see another leg down, I think it's a little too premature. So trading corrections is a little difficult because there's so many different types of corrections out there, right? You can get a zigzag pattern. We have up, down, and up. That's a zigzag. A flat pattern would be up, coming all the way back to 120, and then up again, right? Or a triangle where basically just like a sideways triangle. And all of these can take many forms and shapes. So all we know right now is that we have immediate resistance at 129 and immediate support at 125. If 125 does break, the chances of prices going and meeting 120 again is pretty high. If 129 does break, we can see probably prices tagging the 50-day moving average, which is right around 130, 131. All right, let's take a look at the the hourly view. Okay, same thing. Basically 125, right? As you can see, pretty good support. During the rally, prices used the 20 and the 50-hour moving average as pretty good support. Now things have turned around, so the momentum has shifted, and prices are now using the 20 and the 50-week as resistance now. All right. So Friday's action was lackluster, to say the least. We really didn't go anywhere on Friday. Okay. Let's take a look at the VIX. Just to look at the sentiment. Really, nothing much. Same thing as the market. Nothing much has really changed this week. We do have support right around the 2021 area. Okay, right around here. Prices did produce a, I guess you can say that's a morning star, so it's a bullish reversal for the VIX, which basically translates to a bearish momentum for the SPY. Right. But as far as sentiment goes, there's really not a whole lot of fear right now, at least not yet. We experienced that momentarily last week or 2 weeks ago, right here when the VIX pierced above 30. But as far as right now, there's really not much that the VIX is telling us. Let's look at the open interest. The thing that the strike price that really pops out is right here. This is the puts column, and this is the columns right here, is 120. Same thing with the last week. Last week 120. The amount of open interest for 120 was pretty high. Same thing here. So once again, this reinforces that 120 will be a pretty good support level. Okay. As far as the calls, there's really nothing that I can see that stands out. Okay, and same thing with the puts. Other than the immediate strike, the 120 does stand out. So just to recap, if we look at the SPY again, just to recap, 125 I'd say is a pretty good. It's a pretty good critical level. If it's broken, the chances of going to 120 is pretty high. 129, if that's broken, look for a resistance around 131. Okay, and that concludes this week. We'll talk again next week.